Hey guys, welcome back to another video for Watch Trading Academy, and today we're going to talk about the changes in the market to watch for in the next 12 months. So you may be wondering, what does that mean? Well, we've seen a lot of videos that are coming to conclusion very quickly that everything's collapsing, the world's ending, etc. And so instead, I wanted to give you an intelligent video talking a little bit about the economics, what we can expect, and more importantly, what are some of the signs we want to look for in terms of seeing if there are going to be any changes in the watch world or not as it pertains to values, future trends, etc. Remember, here at Watch Trading Academy, we teach you how to make money trading and investing in watches, which is something very different than you may have seen other people talking about. So we are very prone on values, not so much horology. So we want to look at money, and there's a lot of misleading factors and charts like Chrono 24 or watch charts and some of this crap out there that just gives you bad data that basically is owned by jewelers and encourages you to purchase things at a higher dollar than they're worth. So today we're going to take a look at what are some actual economic factors to look out for in the next 12 months to be able to make a good educated decision on should you take more positions or not in the watch market and so on and so forth. So again, remember, if you don't know how to flip watches or basically make money off of your timepieces, click the link in the description, take the free training, and understand if you'd like to join our community on learning how to do this step by step, right? Everything from a $1,000 watch all the way up to $1 million watch, we teach you all of it step by step. So regardless that where you live in the world, if you have $1,500 access to a post office and a computer, you could literally be getting some significant ROIs, and you need to click the link in the training. But let's get through these changes, because there are a few things happening in the world that we need to pay attention to, especially if we're going to be buying watches over the next 12 months, because we've heard obviously the idea of buying the dip and the opportunities ahead, and will there perhaps be even more opportunities or not? So one of the manipulating factors of the watch market as a whole is the global aspect of watch trading. So what does that mean? We've seen watches move from Europe to the US to China, these buyer pools and money coming in to buy or supply, or new customers appearing depending on the currencies at hand. Now we've seen this, and we've seen the transition happen on a continuous basis of these watches twirling between these three continents. But one of the things that we want to pay attention to is that the Asia market seems to be the one with the most relevance and buying power over our market, and then the European market, while it is also trading with the US, it is happening on a much more smaller base volume, and it's also happening with watches that are on the higher side of things. So basically less and higher dollar versus more volume. So like the Rolex stuff and the base Patek stuff goes over Asia a lot, and a lot of the AP stuff and higher end Patek ends up in Europe a lot. So there's this constant shift of goods happening. But there's a lot of turmoil right now between Russia and China trying to basically change the way trades happen with the US. So we can expect this over the next 12 months to take a very big front row seat to the future of watch trading. And what I mean by that is, how will the Chinese and how will the Asian markets react to perhaps not being able to do as much trading with the United States, especially as it pertains to rules around selling certain goods or brands existing in certain places. We've seen the exodus from Russia and all of these brands leaving Russia, like, you know, the Hermeses and the Rolexes and stuff, closing their stores in Russia and now existing overseas, but pulling their inventory out. This is a big deal, because that means that this market now will no longer be directly able to walk in a store and buy something unless they go here to another country. Now, what's going to be interesting to watch is that China, should it go into some type of conflict with the US or something in the future, will be an interesting place to see, because there's a lot more money in Asia than there's in Russia. Like the GDP of China is almost matching the United States, and while their economy is in turmoil right now to some extent, they're also a lot more in control of their economy, because there isn't really a vote around things and it's more of a dictatorship. So you have an economy here that is really driven and could shift heavily by the decision of one party, right? Very quickly. And so what we could expect to see if there was a conflict would be a very hard argument to say all brands will leave Asia just like they left Russia, because that is a gigantic market for a lot of these brands, and they may not be able to afford doing that. So they may split these brands or start literally distributing in Asia only versus in the US only, and the connection between the two and the transport of goods and so on and so forth could be blocked, which would create a very interesting dynamic of how importers and exporters are moving units, and also just general public bringing stuff. I mean, it's very hard today to ship a package in the Middle East and to receive a package in the Middle East. It's almost unlikely. It would be near impossible for me to ship a Rolex from the US to Iran, or to receive one from Iran to the US. And I would be very cautious to say this, but it's very possible that if the conflict was to get worse and was to escalate to some type of military conflict, it would be very true that this same type of sanction and scenario may occur between Asia and the US. Now, what would happen if this was the case? How would it change things? Well, there is some path here to paying attention to, which is that what if, and I ran this scenario in my head because I'm always trying to stay ahead of markets, what if we said that watches, wherever they were basically shipped to ADs, had to stay in that continent or in that place, right? Meaning if watches came to America, they would have to only be traded in America. If they came to Europe, they would only have to trade in Europe. And if they were to Asia, they would only have to be traded in Asia. How would that change the dynamic of the watch game? And here are some basics I've come up with. So first off, if we only had US watches versus Asia watches, and these watches were not intertwining or leaving the ADs here and there, and travel was limited, so for 2 years, perhaps we didn't see any foreign money influence buying our real estate or watches, etc., we could see some interesting pull, because this would heavily limit the reseller and wholesaler's opportunity to leverage currency from one country to another. So that's a big deal, because we would see a lot less reseller activity. It wouldn't be as lucrative a business. So that's the first step, where we're going to see less reseller and more end user. Secondly, I think one thing that's important is we would see a lot more price stabilization, because that price would be geared only to what you can find in the country and not what you would see overseas. Today, a lot of people use comps and search globally for a watch, especially over 100K, to see what they can get it for elsewhere, because it's just shipping an item over. However, in the future, it may not be the case. So if we're only comparing units here, it would be no different than saying, what if you could only buy a car from your local dealer? Well, you would have a lot less cars to buy, therefore the pool of what you're trying to buy would be very different, and the pricing would be limited, almost like a monopoly, to that specific dealer. Part of the reason you can get a very good deal on a car or a watch is because you can shop around, and you can only shop resellers, you can shop ADs, and so on and so forth, and get the best deal possible. Now, in today's market, it's obviously very hard to get a brand new watch from an AD that matters, like a Rolex, Patek, AP, etc. But it doesn't change the fact that relationships, some people still get a discount, other people pay list, other people pay tax and list, and so on and so forth. So things change based on where you are and what you're doing. And it's very, very important to understand that if the global economy was to get shaken even further than it has already, and globalization was to take yet one step backward, again limiting trade and limiting what can come in and out of the country via shipping, even if it's private shipping, you would start to see a significant increase across the board in pricing to mimic the markets that they are in. Meaning no different than saying if you were going to buy a watch in a very heavy watch area like Miami, New York, or LA, you would probably get a better deal because you'll get more competition. Versus if you could only buy a watch from maybe North Idaho, you might feel that there isn't a lot of competition, you're forced to pay what you have to pay. Usually we've seen that the less globalization in the watch market, the more concentrated and expensive pricing gets. So keep an eye out on that specific issue here with Asia and how it plays out over the next 12 months. Secondly, one other thing to pay attention to, which is going to be very interesting, is going to be the supply shift post the drop. So we've already seen this. A lot of big watch accounts that are doing big volume in high-end watches have already started posting, want to buy your Patek, want to buy your Rolex. So suppliers and resellers are starting to take new positions. So this tells you very briefly that they are buying the dip, and they're starting to believe that the curve is happening where the upside beats the downside. So they're taking their positions again. This is very important to understand, and it's very important because once you start seeing the volume of reseller inventory leaving, you'll start to see that. One other thing I'd like to point out, as I teach in my training here as a freebie for you guys, a lot of listings on the internet are obviously fake or no longer in stock, and they're old. Now, in a market where things are going up, this is very easy to note by just calling and making sure this listing is in stock. And in many cases, it is not. So you're competing for a real listing, not just for a fake or a broker listing. But one of the things we'll notice today in today's market is that during the last 3 months, we've seen a huge increase of inventory on the market, and we've seen that inventory kick up so much, like it just keep pushing down so hard that it just didn't necessarily make sense for people to take positions. However, now we're starting to see that a lot of the lowest priced inventory on the market that is still left on the listings is now out of stock, and the listings are still up. And we see this transition because we've seen this in the past where high listings appear, low listings are here, and we believe that, wow, well, this is very far from this, but this lower listing doesn't actually exist. It's been sold because it's been left over. So expect more empty, cheap listings to be on, and we'll see how that plays off. But we have seen a significant shortage of reseller supply on the market now, and jewelers haven't taken new positions. Now, the latest watch show here in Miami, a lot of jewelers were stuck in very expensive items, and they weren't able to sell them, obviously, because they have so much of something and it's crashed so much, they don't know what to do. At some point, these jewelers are going to have to take losses and carry on, but nonetheless, they're also expecting this little dip to give them an advantage to taking less of a loss. So these are the changes you want to look for in the next 12 months as it pertains to wash trading to see the direction in the market and what's happening. I have a feeling that we're going to see price increases over the next 6 to 12 months, but in a different way that people have been predicting. I don't think we're going to see them across the board for everything. I think rare, harder to get, sought after items are still going to go up, and I think this big piece of it is going to have one of the biggest impacts on the watch market over the next 12 months, and we're going to have to see where that goes. Let's hope this can be avoided and everything can continue to work as it has, but that is something to look out for, as I said, because this is something that'll give you a good grasp on what's happening in the world ahead as it pertains to watches. So if you want to learn how to do this, again, don't forget to click in the comments, and then you tell me specifically in the comments, what do you think? What do you think is one of the leading indicators we should look out for over the next 12 months? Is it Bitcoin? Is it the stock market? What will impact the watch market even further with some real data? If you have any real comments to put them in the comment section. Like, subscribe, turn on notifications, and I'll catch you in the next video for Watch Trading Academy.